On the money right here on WDBO. My name is Greg Rhodes, joined today by the people of Certified Financial Group, the people who are planning your financial future, making your tomorrow just a little bit better than your today. Joining us today, we have Joe Bert and Dave Balakrishnan, certified financial planners with the Certified Financial Group. And you know by now that for more than 30 years, the professionals at Certified Financial Group have been answering your questions for you every week here on WDBO's On the Money. They've become Central Florida's most listened to financial call-in program, and it is the only call-in program where all the hosts are certified financial planners. And again, we have Joe Bert and Dave Balakrishnan.
Good morning, Greg.
Hey, good morning. How are you guys doing today?
A little chilly, my friend.
A little chilly here today.
Yeah. But as long as it don't get much colder, I could deal with it. Well, it's good to be with you and our listeners. As you said, for more than 30 years now, the Certified Financial Planners of CFG have been here providing ideas, investment advice, things you may be considering about your long-term health care, annuities, life insurance, reverse mortgages, stocks, bonds, real estate, all the things that Dave and I and the 15 other certified financial planners work with our clients, providing them retirement planning and investment management for a fee, Monday through Friday. But as you said, on Saturday morning, we are here absolutely free. So if anything that's on your mind regarding your personal finances, things you've been thinking about, things you might have heard, rumors you want to have cleared up, that's why we're here. And the good news for you is the lines are absolutely wide open. So all you have to do is pick up the phone and dial these magic numbers.
That's right. And those numbers are 844-580-9326. That's 844-580-WDBO. Or you can use the open mic feature in the WDBO app. And don't forget, you can also call 407-869-9800. That's where Rodney Owenby is taking your calls off air. And today's topic is staying safe this season from holiday scams, and they are everywhere, Joe.
It's that time of year, right, Dave?
Yep, it is.
All kinds of stuff going on out there.
Yeah, it's just as you wrap up your Thanksgiving meal and getting ready for buying gifts for the holiday season and so on. There's a lot of things happening. Maybe you were researching through your online for trying to score a good buy. Yeah, you got to stay alert. So maybe we can start with the first of the holiday scams. Let's talk about the online shopping scams.
That's probably the biggest one. Probably where the biggest problems lie, because there's so many opportunities out there to fall prey to those convicts out there. They're trying to get our money.
Yep.
So what'd you find?
Yeah. So essentially, I was looking for a oven for the holidays to replace our oven at home. I was starting to search online in one place, and guess what? It shows up. An ad for it shows up literally in your social media app. Shows up in every website I ever go to after that for probably a week. You know what? It also shows up as an email saying, "Hey, here is a great deal for you to buy that oven that you were looking for." Guess what? It could be a scam that takes you to a website that is essentially looks just like a real store, but tries to get your information, get your money, and then there you go. Bam! If it's too good to be true, it probably is. Stay alert, pay attention, look for that link. Look for the link on the top. It says HTTPS or has a padlock. Pay attention to those little details, the right spelling, and this is important to make sure that your money is really getting what it's worth.
So the key is start right at the top where the address is. Look for the HTTPS, look for the lock, and that gives you somewhat security that it's a legitimate site.
Absolutely. And adding to that, when you're trying to buy these things online, it probably is a good idea to use a credit card, because credit cards usually don't link back to your bank accounts, and usually they offer a better fraud protection instead of a debit card. So it's something to keep in mind. Use a credit card if you have one. If you're essentially all these little steps add up to keep you safe in this holiday season.
Yeah, people don't realize that, if you give somebody your debit card, you've really given them your checking account. And it's so easy to just take out more than whereas with a credit card, as you said, and that's why I do everything online with a credit card, because you've got the backup of American Express or Visa or MasterCard if the fraud comes about. And today, I'm sure you've seen it when you make a charge on your credit card, if you have it set up anyway, you get an immediate notification on your phone that the purchase has been made. So you can really eliminate those kinds of things. So you're 100% right. If you're going to be shopping online, do it definitely with a credit card and avoid a debit card.
Yeah, absolutely. And leading to that, once you've done that payment using that credit card, so we'll talk a little bit about these phishing emails and texts, right? You get a confirmation saying you've made a purchase, or, that's the good part. Sometimes you're going to get a text that says your transaction was not completed. Use this link to verify that your payment was actually made. And guess what? That could be a link that takes you to a website where they collect a lot more information. They try to authenticate you multiple times. They try to ask for your, starts off with your credit card, but then eventually your address and maybe some more details. And so now this is where they're starting to get more personal information. These systems, these people do this and they know what they're doing. They get a lot more information you probably need to give away. And all this adds up to eventually possibly taking your money, giving other avenues for them to come after you and scare you to maybe give up other resources.
Yeah, you don't want to give away any more information than you'd have to. And of course, when you're buying online, you have to give them your credit card information. But as we just said a few minutes ago, at least using your credit card, you have the protection from the credit card companies about that. But when you think about the billions of dollars that the credit card companies have to fall back on, and it's just raised the prices for you and me. I mean, we talk about inflation. I think that's part of what's going on in the raising prices. The theft, the cyber theft. It just pushes up prices for everybody, for all the crooks.
If it was an industry, it's probably one of the fastest growing industries out there.
Yeah. So what else you got?
So some of the other things. So you get these text messages, right? So you have a text message that says, "Hey, your package was held
because of non-payment."
An address verification.
Oh, I've gotten those.
Oh, yeah. So I get that. I mean, amazingly enough, I get this from USPS or at least what looks like USPS. But then the link actually takes me to some weird website that looks almost like it. But it just doesn't, it looks odd. Trust your gut. Trust your first instinct that says, could this be right? I think USPS does not send text to verify addresses. So typically, those are 100% fake. Pay attention to your shipping notifications. You're probably better off going to the actual website where you bought your stuff. Go in there, pay attention to your order. There is usually a link there, and use those links and not any of these texts that could come out and say, "Hey, here is a link to verify your shipment or your shipment is stuck." I'd have to say nearly 100% of those have been fake. If you get a link in your text, be doubly cautious.
Yeah, I've gotten those, and particularly this time of year when you're expecting things to be delivered, you're expecting packages, then you get this notice that pops up and says, well, it can't be completed because the zip code is wrong or the address is incomplete or something. Please click here to complete your information. Just delete that, because definitely, as you said, go directly to the website. If you're buying on Amazon, you can look at your orders. It'll tell you what you bought, where the status of it is, and you don't have to be relying on these bogus texts and notifications that you get. So stay away from those things. Just hit delete, because they're trying to get in your wallet.
Yep, and there's more ways for them to get information about you. Like I said, once you start looking for something, they show up everywhere. Ads for them show up for that, and then all of this leads to almost they could build a program that tries to extract more information from you. Again, pay attention to what you're doing. Take an extra minute. I mean, if you're working on it late at night or so on, just look for that address. Look for the stuff that comes in. It looks a little bit odd, a little bit misspelled, sounds about the same, but is spelled differently. Check that again. Check that multiple times before you hit that button.
I think the rule of thumb is if you even have the slightest doubt, just hit delete.
Yep.
Because that, once you open that door, they can get into your computers and start putting in malware in your computer, and before you know it, they have control of your computer. They're watching everything that you do. They know you're doing your banking online. They get your passwords, and all of a sudden they're in your bank account.
Right.
Yeah. I don't know if you saw it. One of our colleagues, I think I talked about this last week with Nancy. One of the big scams now is checks being stolen.
Yes.
In the mail. And one of our colleagues, unfortunately, had this happen to him. And he was making a payment by check. The check got stolen in the mail. And then they had this technique of bleaching the check, right, and redirecting it. And he had his bank account.
I've heard that more often than I've heard a lot more of this happen more recently than ever before. You've mailed out a check to maybe somebody who came to work in your house because they preferred a cash payment, or in general, you're a little bit concerned about working online, making payments online, and then you still use checks. Just make sure you pay attention to your bank statement. Try to stay on top of things. Make sure these checks are getting collected, because what you wrote as an $800 check suddenly became an $8,000 check and went to the wrong person. This is happening, and this is happening a lot more than probably are known out there. So like as Joe was saying, one of our colleagues had it, and then I've at least had a couple of friends talk to me about it in the last month.
Yeah, it's more and more prevalent today. So just keep your eyes open, and once again, try to do online banking. Try to get your payments made through your bank online. That's the safest way to do it, as opposed to putting stuff in the mail today. That's a pretty sad state of affairs when you stop to think about it. You put stuff in the mail, you think it's going to get to where it's going to go, and all of a sudden your check has been stolen, and so is your money.
Right.
So you got to keep your eyes open. Got anything else on the tips there?
Yeah. So I think moving right along, we can talk a little bit about charities. I know Nancy was talking about things to do at the end of the year, as you kind of wrap up your 2024, giving money to charities. I mean, this is the holiday season. We all, season of giving. We all want to give a little bit to the charities that we like. What you end up finding is, the scammers are also at it. They know people are giving. So the people create elaborate schemes. They create websites. They create an elaborate story, that tugs at your heart and says, give up something and so on. So when that happens, stay alert. Before you write the check, you might want to use some online resources, the IRS website, things like that, just to go ahead and take a minute to verify that it is a real charity before you write that, make that online payment or write a check or whatever you do. Just being alert. People do elaborate things, and it's a sorry state of affairs, but there are elaborate schemes to get after you for the money.
Yeah, this time of year, the heartstrings, they have sob stories about people losing their job or some illness, or I'm going to be out in the street. And there's a lot of that stuff going on. It's legitimate in many, many cases, but in many cases, too, it's also illegitimate. And they're just trying to get in your wallet. So I see we're up against a break here. Greg, you want to take it away?
You've got it. If you have any questions regarding our topic today or any other financial questions and want to call in, just call 844-580-9326. Again, 844-580-WDBO. Or you can use the open mic in the WDBO app. You're listening to On the Money, where we're planning tomorrow
today
with the Certified Financial Group.
For more than 40 years, our certified financial planner professionals, acting as fiduciaries, have been providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're a certified financial group, but we're planning tomorrow, today. Our fiduciary approach to providing retirement planning and investment management for a fee seems to resonate with our clients. But don't take my word for it.
I knew a gentleman that I worked with who had come to Certified Financial Group.
A friend of mine recommended them, and they were totally correct how good they are.
I had heard from somebody else that it was the best one in town.
I've sent several of my teacher friends here.
We're a certified financial group, but we're planning tomorrow, today. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries, and providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're a certified financial group, but we're planning tomorrow, today. Black Monday, the dot-com bust, 9/11, and now 2 wars. We've pretty much seen it all. Acting as fiduciaries, our CFP professionals have been a steady hand guiding our clients to and through their retirement years.
No reason to be worried about anything.
Stay the course. You stay the course, and you get there.
I don't have to worry about it like I know a lot of people look at it every day. I don't have to do that with the team here at Certified Financial Group.
We're a certified financial group, but we're planning tomorrow, today. Are you tired of trying to reach your advisor through a call center and being put on hold for 20 minutes? That's why we don't use one, and our clients seem to appreciate the personal touch.
They always answer my questions and really care about what's going on with me.
You can trust what they say, and they do what they say, and it gives you a comfort feeling it's hard to find in the world today.
Waiting for you to call almost. You almost feel like that.
We're a certified financial group, but we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
Welcome back to On the Money here on WDBO 107.3 FM and AM 580. You can also listen live on the WDBO app wherever you just happen to be today on this holiday weekend. Today we have Joe Bert and Dave Balakrishnan from the Certified Financial Group. And if you have any questions about your finances, just give us a call here at 844-580-9326. That's 844-580-WDBO. Or you can utilize the open mic feature or just give a call to 407-869-9800, where Rodney Owenby is taking your calls off air. And now, back to our hosts, Joe and Dave. And I know today we're still talking about this, staying safe this season from holiday scams. And again, there are just so many out there, right, guys?
Yep, absolutely, Greg. So like keeping in the theme for this week, talking about the holiday scams, just another thing about the charities we were talking before we took the break. If a charity or somebody is reaching out and trying to pressure you to do something, right? There's a sense of urgency. They don't want to let you hang up or try to pressure you to take an action urgently. It is a scam. It is a scam. There should not be a reason for somebody to pressure you when you are the person who's trying to give it as a charity. So just if they're trying to pressure you to do something, hang up, move on from the website, wherever they're trying to approach you. So that's something else to remember about these, people trying to take advantage of the season for your charity dollars.
And if they're asking you to go out and buy gift cards?
Yep, that's the next one I was going to get to, Joe. So this is the other fast-growing scam that is going out there, right? They're asking you to go get a gift card or trying to get you to send money in gift cards, right? So just pay attention to that. Do not, no reasonable agency, government or otherwise a reputable institution is asking you to pay with a gift card. If they are, it is a scam. Walk away, stay away. The other thing, right? So this is a season where we're trying to score a deal on a gift card. You're searching online, hey, gift cards for this retailer, and guess what? There is a link that pops up, says there's 5 of the same gift card for this particular store. You get another 10% or 15% off. There's a chance that this is some kind of, somebody trying to sell gift cards that are not even real, tampered, fake. Pay attention to those things. You do not want to try to use any third-party website to get a gift card for a reputable retailer. Go to their website, log in, submit your stuff there. Again, check for that HTTPS, check for that padlock on the top of the screen. So things that you can do to make sure you're getting a gift card, you're getting what you pay for, and not try to score another deal there, but for buy 4 get 1 free or whatever deal they might offer. This could be another scam they're trying to either sell a tampered gift card or doing something that just you lose your money and you're out of your pocket.
Yeah, well, along that line, I've seen situations where you think you bought tickets for a concert,
Yep.
and you bought tickets online, and they give you tickets.
Yep.
And then you get to the gate, and they tell you these tickets are bogus, and you're awfully embarrassed there if you're with your date.
Right, absolutely.
Not a good situation. We've got a workshop coming up. You're going to be doing a week from today. Dave, tell us about it.
Yeah, so we're going to talk about this coming week, tax planning through your 4 stages of retirement. We're going to talk about how your taxes can change as your start to draw Social Security, and maybe once with the new Secure Act 2.0, your RMDs are delayed. But that also means how much you take out of your RMDs it probably goes up, which means your taxes are going to go up. So there's some tax planning opportunities as you go through your retirement years, and that's what we'll be talking about in the workshop.
So that's a week from today at our offices at 10 a.m.
Yes.
10 o'clock, 10 to 11:30.
10 to 11:30.
10 to 11:30 right here in Altamont Springs. All you have to do is go to our website. That's financialgroup.com. Financialgroup.com. If you click on events, you'll be able to make your reservation right there. This is a very popular workshop and will be hosted by my friend sitting right next to me here, Dave Balakrishnan, to give you some great information. It's absolutely free. People often ask, Joe, why do you do these kinds of things? We do it for basically 2 reasons. Number 1, to prevent you from becoming a financial casualty, number 1. And number 2 is to introduce you to what we do as a firm, providing retirement planning and investment management for a fee. This way, whether you need our services sometime or now or sometime in the future, perhaps you give us an opportunity to earn your business. So I hope to see you next Saturday. Go to our website, financialgroup.com.
And if you have any questions regarding our topic today or any questions maybe about any of those upcoming workshops, just give us a call here at 844-580-9326. That's 844-580-WDBO, or you can use the open mic in the WDBO app. You're listening to the On the Money, where we're planning tomorrow
Today
with the Certified Financial Group.
So you guys don't know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank and there's Stevie and there's Mikey. And these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in and you say, hey, Lou, I'm barbecuing this weekend, right? What do you like? And Lou goes to the big racks of stuff he has underneath the glass, and he goes, the veal chops, just in from Argentina, they are the bomb. And you go, veal? Oh, I like veal. Well, what do you got on skirt steak? Oh, we got some great skirt steak. Just came in yesterday from Montana. Skirt steak is one of my favorite. Marinated up a little bit. It's fantastic. Lou will never say to you, Elliot, it's a little long on the meat here, big guy. Your cholesterol is getting high. Why don't you go down to the fishmonger a couple blocks and have a nice piece of salmon? Right? He'll never do that. Why? His job is to sell me meat, and I go in, actually the same way I go into the Toyota dealership, because I like Toyotas, and I trust the salesman to sell me a good product if I trust him. And the fact that he's got my interest at heart vis-a-vis my expectations for selling me that thing. By the same token, when I go to see a dietitian, I know she's going to look at all of my labs, she's going to take all the measurements, she's going to run all of her analysis, and she's going to absolutely give me her best thinking on what's best for me. Whether she's a vegetarian or a meat lover, likes this, likes that, if she thinks I should be doing something differently, even if it's not good for her, she's going to give me an opinion that's for my interest. So what's the difference between a fiduciary and the brokers? Well, these are dietitians, these are butchers. It's that simple. Brokers are butchers selling product. Fiduciaries are dietitians looking after your health. The problem is most people think that their butcher is a dietitian. So when one of your moms or dads or friends calls the broker He says, I got 200 grand, I sold a little piece of property, or I got some inheritance. What should I do with it? They're going in thinking they're talking to a dietitian, and they're really talking to Lou the butcher.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today.
40 years ago, I had a dream of building the best personal financial consulting firm in Central Florida. Now, with 14 certified financial planners acting as fiduciaries, I believe we're there. But don't take my word for it.
As we approach retirement, we have the freedom of choice.
Peace of mind that we now have. That's everything to us.
The people that work here are honest and caring, and I feel like I can go to sleep at night.
So schedule your no-obligation visit today at financialgroup.com, or we're planning tomorrow, today. For more than 40 years, our certified financial planner professionals, acting as fiduciaries, have been providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, but we're planning tomorrow, today. Our fiduciary approach of providing retirement planning and investment management for a fee seems to resonate with our clients. But don't take my word for it.
I knew a gentleman that I worked with who had come to Certified Financial Group.
A friend of mine recommended them, and they were totally correct how good they are.
I had heard from somebody else that it was the best one in town.
I've sent several of my teacher friends here.
We're Certified Financial Group, but we're planning tomorrow, today. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries, and providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, but we're planning tomorrow, today. Black Monday, the dot-com bust, 9/11, and now 2 wars. We've pretty much seen it all. Acting as fiduciaries, our CFP professionals have been a steady hand guiding our clients to and through their retirement years.
No reason to be worried about anything.
Stay the course. You stay the course, and you get there.
I don't have to worry about it like I know a lot of people look at it every day. I don't have to do that with the team here at Certified Financial Group.
We're Certified Financial Group, but we're planning tomorrow, today. Are you tired?
On the money right here on WDBO. My name is Greg Rhodes, joined today by the people of the Certified Financial Group, the people who are planning your financial future, making your tomorrow just a little bit better than your today. Joining us today, we have Joe Bert and Dave Balakrishnan, certified financial planners with the Certified Financial Group. And you know by now that for more than 30 years, the professionals at Certified Financial Group have been answering your questions every week here on WDBO's On the Money. They've become Central Florida's most listened to financial call-in program, and it's the only call-in program where all the hosts are certified financial planners. And now, back to Joe and Dave.
Good to be back, Greg. We had some Facebook questions come in last week that we did not get a chance to answer on the air, so if you want to pull those up, we can hit them right now.
Sounds great. We'll go ahead and start with Chuck, and Chuck is asking, on a $100,000 actively managed IRA, how much in dividends could he expect to throw off monthly?
Well, that's a wide open question because it depends on, first of all, I think what he's asking is if I invest in stocks, of course, which pay dividends, you either have common stock or preferred stock, and stocks pay dividends based on the profitability of the company and what the board of directors decides to pay out, so on and so forth. Now, it all depends on the stocks in which you're picking. And so people say, well, I've got this money, and what they're really asking is, or what they're in the back of their mind is, what they want is an investment that their principal stays constant and they just live off the dividends. I mean, that's the ideal world. Now, unfortunately, that's not what can happen because the value of those stocks, whether there's common stock or preferred stock, are going to fluctuate depending on what the company is and what the market is and so on and so forth. And of course, the dividends will fluctuate depending on the profitability of the company. So the best way to answer that question is how much income do you need? Now, not how much you want, but how much do you need to get to where you need to go? And then what you need to do is put together a portfolio with a mixture of fixed income, which are basically bonds, and equities, which are stocks, and using no-load mutual funds or ETFs. And the right combination of those will give you some target rate of return. And then what you look at is what we call your total return. What is the total return on that combination of fixed income and equities to give you that total return? And then that's what you can plan on drawing from. Now, that being said, that value of that portfolio is going to fluctuate. Just like if you own the individual stocks, it's going to fluctuate. But if you're first of all, if you're not trying to hit home runs, you expect a reasonable rate of return, this works in the long run. I can tell you I've been doing it for years and years and years and years, and it does work. And the most important thing, though, is keep in mind is what you don't want to do is try to time the market. Get in, get out. People tell you, no, there's a time to be in, there's a time to be out. Forget it. What you want is a diversified portfolio with quality, trying to reach that target rate of return that you need to get to where you want to go. And really, that's the answer to that question. So I'm not sure I answered it specifically, but that's the best I could do with the information that we have. What do you think, Dave?
And adding to that, maybe Joe, adding to that in terms of keeping with the theme of be staying alert. It's a function of what you're holding for always. You want to watch for what dividend yields might be and things like that in some of these investments. But what you want to pay attention to is that if that yield sounds incredibly high, it also means you're taking on a lot of risk.
Right.
What that also means is your portfolio is going to fluctuate quite a bit. Hopefully, it is a good and legitimate investment. I mean, you'll read articles out there where people have kind of invested in something that gives a 13-14% yield. Guess what? It might happen for a couple of years, but after that, your investment could go bust. So just stay alert, pay attention to what's your holding. Again, it's the question is, what do I need? And can I do that with the right amount of risk without taking something really trying to hit out of the ballpark?
Exactly, yeah. People chase the dividend return, and we don't realize the reason that dividend is so high is because the stock is so cheap, and the reason stock is so cheap is nobody wants to own it because the company's in trouble. So that's the trade-off. That's what you have to understand about investing. So anyway, I'm not sure I answered that question exactly as the listener wanted it answered, but that's my answer for it. So that's all I got this morning.
That's fair. I think that's fair enough, right?
All right.
We've got another question here from Facebook from Lori, if you guys wanted to continue.
Sure, let's do
those.
it. Mm-hmm.
Lori says, hey guys, can you add to an IRA after you've already retired and start collecting Social Security?
So some of the recent laws that were passed with the Secure 2.0, so I think one of the things that went away is a limit on your ability to contribute to your IRA. However, what you have to keep in mind is you have to have what's called earned income. And earned income is usually a source of money where they are still taking some contribution towards a Social Security or something else.
Well, unless you're self-employed.
At the end of the day, you have to pay into Social Security.
Exactly. Mm-hmm.
So you have to be paying into Social Security. That is usually a good way to tell that it is a valid earned income that could be qualified as the basis for contributing into an IRA.
So rents don't count, dividends don't count, capital gains don't count.
Correct.
Generally, wages or earnings that you would have.
Right. So you can have a side gig. You want to do something out there and then get paid a little bit of it just to keep yourself active. They're actually giving you a W-2 or a 1099 or something like that, which will actually have your wages, and a little bit of it went towards self-employment through Social Security or directly from your W-2. So those are little things that can add up, and that's the extent. You can contribute to the extent of your earned income. So if you don't make, let's say, the $8,000, you cannot contribute $8,000 to your IRA. It's capped to your earned income.
Right. However, there is a caveat here. And the question is, they're saying I'm collecting Social Security, I can't do it. Now, if your spouse is still working,
yes,
you can do a spousal IRA.
Absolutely.
So you can have a regular IRA and a spousal IRA, and you can still have money put into your IRA even though you're collecting Social Security.
Absolutely.
So that is as an option for you, and that's the answer. All right, and I saw we had some text questions floated in there, Greg, so let's take those.
We did. We've got one here from Jim out in Kissimmee, and Jim asks that he's been contributing 4% to his company plan to get company match for the last 10 years. combined with Social Security, will he have enough to retire?
That's a good question. Again, I think I'm going to go with the answer that Joe gave to one of the previous questions. The first question is, how much do you really need, right? And it's also a function of how much they are making today. So it's a combination of these things. At least in my experience doing this with a lot of people, I think our experience, just doing the match is probably going to be making it difficult. It's going to be tight. I think, out there, the recommendation is, 10%. The newest rules that came out with Secure 2.0, again, employers are required, if they're having a plan, to have an auto enrollment. They also are required to increment that by 1% every year. So again, all this in the spirit of adding to your nest egg, keep increasing that, doing it just at 4% on Social Security. More often than not, it doesn't cut it. That's at least our observation. Joe, anything else you want to add?
No, once again, it's a function of your lifestyle as well. I've seen people get by with very modest incomes in their retirement years simply because they don't have any debt at all, and they have a modest lifestyle. And then some people that have a pretty extravagant lifestyle, they're not going to make it simply because they didn't put enough aside over those years. So it's all, and that's where planning comes in, Dave. As you know, this is what we do with our clients. We sit down and look at where you are, what you have, what the future holds for you, factoring in taxes, factoring inflation, then see if you're on track. And if you're not on track, what adjustments do you need to make now so you don't look back 5 years from now and say, gee, I wish I'd have known, or gee, I wish someone would have told me. So this is what Dave and I and the 15 other certified financial planners do for our clients, working with them, providing investment advice and financial planning for a fee, Monday through Friday. But here on Saturday morning, we're trying to answer your questions for free, and that was one of them. So I saw we had another one float in there. Greg, take it away.
I do. This is a good one from Gabe out in Titusville. Gabe needs $25,000 to put a new roof on their house. Should they do a loan, or should they do a hardship withdrawal from their company 401k plan?
This is another question where it depends is probably the right answer. It depends is usually the right answer on this one again. The interest rates as they've gone up in the last year, this gets a little bit more of an interesting twist. When the interest rates were lower, I think the answer was quite obvious. Stay away from dipping into your future nest egg. But again, as interest rates have gone up, this could come into play. But again, it's a combination. This is where a plan comes in, as Joe was talking to. It's a question of whether you are able to if you have a good credit history, maybe you can get loans at a favorable rate. I know plan hardship withdrawals can give you a favorable interest rate or a very small increment. There's arguments to make that's a viable option, but I think it's probably not the first one to go after. There are loans that you can go after, that's hopefully with your credit history, or look for other options before you really go for this hardship withdrawal or a loan from your 401k.
And the hardship withdrawal is going to be taxable to you. That's not a loan. Now, if you're borrowing from your 401k, that's different because you're paying yourself back. But a hardship withdrawal, you're going to be paying taxes on that, and that's not a good situation.
And if you have a cash flow problem, you're going to struggle all the more harder to pay back if you're doing it as a loan.
Exactly.
And you're essentially going to put yourself into taxes. If you're below 59.5, there's a penalty for it. So there's all kinds of implications that can come that you just haven't thought through. So again, a plan is probably a first step if you can. And the next step from there is understand your cash flow. I think a loan from your plan is probably a measure of last resort before you really go down that route. Hopefully that answers the question.
And what else you got there, Greg? I saw another one come in.
Yeah, we've got time for one more. Let's see. So Neil out in Sanford is asking that he heard that the Secure Act requires catch-up contributions to be made only to a Roth 401k account. Is that true?
Well, Dave, you're going to be covering this next Saturday?
Yep.
All right.
A little bit of that, yes. I mean, the rules are out there. Not all plans are ready for this one. Yes, if you are what's called a high-income earner, so which is somebody who makes, I believe, about $150,000. So then the companies are required to do the catch-up contribution. So you're above 50 or you're above 60. There's a couple of catch-up rules around that, and you're earning quite a bit. Then the rules say that you have to contribute towards a Roth IRA, Roth 401ks. However, not all plan administrators are ready. I don't think this comes in effect until next year. It is true, these rules are coming. I'm glad you're staying informed and staying on top of some of these things. So obviously, this should help you get this planned right for the future contributions.
And so you'll be covering this once again in the workshop you're doing a week from today here at our offices in Altamont Springs from 10 o'clock, and all the new rules in the Secure Act 2.0. Once again, it's a free workshop. Go to our website, financialgroup.com. And Greg, last week on the air, we had a caller calling. I believe his name was Dave. And he said that he got a letter from Social Security regarding monies that were in an old retirement plan. And I really questioned him on this because I had never heard of this, frankly. And I know that, the state of Florida will send you a letter. They have this treasure fund where funds are actually sent to them if they can't find the owner after many years. I said, it has to be from that. I've never heard from Social Security. Well, lo and behold, I learned something on Monday morning. As many of our listeners know, we have a 401k division here in our company that does exactly that. And the president of that company said, there is something. What you need to know is that is true. What happens is when we file, or your plan administrator, a third-party administrator files the information for the plan for the year, they have to file what's called a Form 8955. And that 8955 tells Social Security who still has money in their plan. And after about 10 years, if the money is still in the plan, Social Security will do exactly what Dave said. So I stand corrected. I learned something, and I'm never too old to hold dog new tricks here.
I was going to say, if it's something that Joe is learning, that means we're all learning.
Honest to gosh, the Form 8955, I did not know about this because I don't file the form, but certainly our 401k department does.
I've seen that. I've seen that about a couple of months ago. There was somebody who came in and spoke to them. So this was a plan for a company that they worked on when they were 20 years old. The company kind of no longer exists. So as they've kind of moved on, they lost track of it. The company has essentially filed with the appropriate authorities, and guess what? 45 years later, he's gone in to file for his Medicare and Social Security. He gets a letter, and he actually brought the letters. He showed that letter to me, and he said, "Hey, I saw this, and can I still go after this?" I said, "Yes, you probably." The thing that could be still challenging is how to get to that money. Right. You still have to figure out if there is some kind of a custodian that is still taking care of that stuff, and try to write to them and get to it. Getting that may still be difficult, but yes, it is not abnormal to get a letter from Social Security, Medicare, when you file for it long after you've left that employer and the employer possibly is no longer operational. You could still get that letter.
Yep. So that's what we learned.
And again, like I said, if you guys are learning something new, that means that we're all learning something new, which makes it great. If you have any questions regarding our topic today or any other financial questions and want to call in, just call 844-580-9326. That's 844-580-WDBO. Or you can use the open mic in the WDBO app. You've been listening to On the Money, where we're planning tomorrow
today
with the Certified Financial Group.
What turns on your lights?
This hour was paid for by the host and does not reflect the opinion of WDBO.
All the text questions.
Now the three big things you need to know. Powered by Hard Rock Bet.
3. The CDC shares food safety guidelines to help determine when Thanksgiving leftovers are no longer safe to eat. 2. The TSA prepares for another surge of airline passengers as the trek home begins this weekend. 1. The holiday shopping season unofficially begins with Black Friday, followed by Small Business Saturday and Cyber Monday.
Of trying to reach your advisor through a call center and being put on hold for 20 minutes? That's why we don't use one, and our clients seem to appreciate the personal touch.
They always answer my questions and really care about what's going on with me.
You can trust what they say, and they do what they say, and it gives you a comfort feeling it's hard to find in the world today.
Waiting for you to call almost. You almost feel like that.
We're a Certified Financial Group, where we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
So you guys don't know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank and there's Stevie and there's Mikey. And these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in and you say, hey, Lou, I'm barbecuing this weekend, right? What do you like? And Lou goes to the big racks of stuff he has underneath the glass, and he goes, the veal chops, just in from Argentina, they are the bomb. And you go, veal? Oh, I like veal. Well, what do you got on skirt steak? Oh, we got some great skirt steak. Just came in yesterday from Montana. Skirt steak is one of my favorite. Marinated up a little bit. It's fantastic. Lou will never say to you, Elliot, it's a little long on the meat here, big guy. Your cholesterol is getting high. Why don't you go down to the fishmonger a couple blocks and have a nice piece of salmon? Right? He'll never do that. Why? His job is to sell me meat, and I go in, actually the same way I go into the Toyota dealership, because I like Toyotas, and I trust the salesman to sell me a good product if I trust him. And the fact that he's got my interest at heart vis-a-vis my expectations for selling me that thing. By the same token, when I go to see a dietitian, I know she's going to look at all of my labs, she's going to take all the measurements, she's going to run all of her analysis, and she's going to absolutely give me her best thinking on what's best for me. Whether she's a vegetarian or a meat lover, likes this, likes that, if she thinks I should be doing something differently, even if it's not good for her, she's going to give me an opinion that's for my interest. So what's the difference between a fiduciary and the brokers? Well, these are dietitians, these are butchers. It's that simple.
Welcome back to On the Money here on WDBO 107.3 FM and AM 580. You can also listen live on the WDBO app wherever you happen to be this holiday weekend. Today we have Joe Bert and Dave Balakrishnan from the Certified Financial Group. And if you have any questions about your finances, just give us a call here at 844-580-9326. That's 844-580-WDBO. Or you can utilize the open mic feature. And you can also call 407-869-9800, where Rodney Owenby is taking your calls off the air. And now, back to Joe and Dave.
Thanks, Greg. I want to remind our listeners of a service that we've been providing for several years now. It's called Score My Funds. It's an opportunity for you to get an objective look at the funds or ETFs that you might be holding in your brokerage account, in your 401k, or in your IRA. It's a systematic, or it's a system that we use that's provided by the Center for Fiduciary Studies that analyzes mutual funds and ETFs on 11 distinct criteria. Everything from how long the manager has been there to what kind of performance you're getting for the amount of risk that the manager is taking. Looks at fees, looks at, like I said, 11 distinct criteria and grades it on a scale from 0 through 100. With 0 being the best, kind of like your golf score. The lower the score, the better. And 100, you shouldn't get anywhere near it. And we will do that for you absolutely free. It's scoremyfunds.com, scoremyfunds.com. You go to the website, you put in the tickers. If you don't know the ticker, there's a pull-down menu. Just put in the fund name. It'll give you the ticker, and we will shoot you that report within 48 hours. So if you want some information about the funds that you have, and if you like follow-up, that's, of course, what we do as well. So that's scoremyfunds.com. And I want to close the program once again with thanking my friend Dave Balakrishnan for being with me this morning. A week from today, he will be holding his workshop on Secure Act 2.0, all the things that you thought you knew or what the government took away from us with the Secure Act regarding IRAs. And Dave, you want to talk a little bit more about that, what you're going to cover?
So it's more about the tax planning. It's about the tax planning through the 4 stages of retirement. So this is about, as you move from regular employment to Social Security, there is probably some impact towards your Medicare. And then as you eventually get to your RMDs at 73, there's again another step up. So we're talking about how all of the income changes can happen as you go through your retirement years and how that plays into your taxes.
Yeah, the real key is when you get into retirement, because if you're not careful on your withdrawals and your RMDs, if you don't space those correctly, then you're going to push yourself into a different bracket for Medicare. And people get shocked at how much more they have to pay on Medicare simply because they mishandled their RMD situation. So these are all the things that you'll be covering once again a week from today. Go to our website. That's financialgroup.com, and you can make your reservation right there online. Then you have another one the following week. What's that one about?
So that one is about Social Security for couples. I know there's a lot of stuff that you need to think about Social Security, but then particularly if you have both spouses working, it's quite common nowadays. There are some thoughts to think about how you integrate those two together and then to maximize the Social Security. So we'll cover a lot more in-depth about Social Security for couples. Again, a lot more common now than before, where you have 2 working spouses, each with their own Social Security benefit. How do you integrate it? How do you maximize it? Really lean on what you've been contributing.
So as we say, the Social Security Administration they can tell you what your options are, but they can't tell you what's best for you and your family. So go to our website. That's financialgroup.com, financialgroup.com. Click on events. You make your reservation right there. And I hear the bumper music. Greg, so that means it's time to wrap up the show.
That is correct. It is time to wrap up the show. And thank you guys so much for joining us. You're listening to On the Money, where we're planning tomorrow
today
with the Certified Financial Group.